Thanks conference call of RIR Power Electronics Limited, arranged by Veritas Deputation. At this moment, all participant lines are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and one on your touchtone keypad. Please note that this conference is being recorded. I now hand the conference over to Mr. Aryan Rana from Veritas Deputation. Thank you, and over to you, Mr. Rana.
Thank you, Michelle. Good afternoon, everyone, and a warm welcome to our RIR Power Electronics Limited earnings conference call for the fourth quarter and full year ended March 31st, 2025. We thank you for joining us today to discuss the company's performance, strategic initiatives, and growth outlook. RIR Power Electronics Limited, established in 1969 and rebranded in 2023, is India's only manufacturer of silicon-based power semiconductor devices. The company is a pioneer in power electronics innovation with a fully integrated manufacturing facility in Halol, Gujarat, and is currently setting up India's first silicon carbide fabrication plant in Odisha. The company's products play a crucial role in across sectors, including green hydrogen, grid reliability, railways, defense, and electrical vehicles. The company's financial results are available on the website and have also been filed with the stock exchange for your reference. Before we begin, I would like to remind you that some of the statements made in today's discussion may be forward-looking in nature. These are based on the company's current expectations and assumptions and are subject to certain risks and uncertainties that could cause actual outcomes to differ materially. We encourage you all to refer to the earnings materials for further details. Now, let me introduce the participants from the management team of RIR Power Electronics Limited joining us on the call today. And I welcome Dr. Harshad Mehta, Chairman and Director, Mr. Ankit Shah, Finance Controller. Following the opening remarks and Q4 and FY2025 financial performance overview by our management, we will open the floor for a Q&A session. Kindly keep your questions concise and relevant to follow broader participation. With that, now I hand over the call to Dr. Harshad Mehta for his opening remarks. Over to you, sir. Thank you.
Thank you, Aryan. Thank you, everyone, for joining our first phone call with the analyst and the investor community. And a very good afternoon to you all. I am Dr. Harshad Mehta, Director and Chairman of RIR Power Electronics Limited. Welcome you all to discuss the operation and financial performance of the company for the fourth quarter and full year ended March 31st, 2025. I will hand over to Ankit. He will take us through the quarterly and full year performance numbers. Okay.
Thank you, Mr. Mehta. At the outset, I'd like to clarify that we are discussing on the historical numbers. Please do note that anything said on this call that reflects the outlook towards the future would be construed as a forward-looking statement. Having said that, now we'll just take you through the Q4 numbers followed by the full year's numbers. The total revenue figure for the quarter is around 26.46 crores. And as far as the EBITDA number is concerned, this quarter we have done an EBITDA of around 3.44 crores. Q4 PAT is 2.55 crores and the EPS is 3.45 rupees per share. With reference to full year standalone numbers, the total revenue figure for FY25 is 86.21 crores as against 66.76 crores in the previous financial year. As far as the EBITDA figure is concerned, we have done an EBITDA of around 11.39 crores as against 9.96 crores last year. PAT for the full year FY25 is 8.28 crores and 7.96 crores in FY24. The EPS for the current year is 11.48 per share, which was more or less the same for FY24. These are the quarterly and full year standalone numbers. Now I will hand over to Mr. Mehta to share some updates regarding our Odisha plant.
So for Odisha, we are focusing on silicon carbide, components, EPI, total ecosystem for silicon carbide. Phase 1, we are at the moment currently setting up the clean room as well as related civil work facility for the first phase of the project. Phase 2 they receive the approval for allotment of 6 acres of land from government of Odisha. Now we request all of you, if you have any questions or queries, you can ask the same.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of CA Garvit Goyal from Invest Analytics Advisory LLP. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible. Please proceed.
So my first question is on the capex part. What is the total amount of capex are we doing in this Odisha plant? And what is the timeline by which we expect it to be completed? And what kind of asset turn are we expecting from it?
So the capex for the Odisha plant is 618 crores over 2 or 2.5 years, and we expect to be beginning the plan beginning end of this year.
And how much amount we have already incurred till now out of the 618 CR?
So far, we have spent about 10% or so.
And you are saying by the end of this financial year, we will be completing the entire capex?
No, it's the total 618 crores could be over 2-year period, but we will start revenue from first part of our ecosystem by end of this year.
And what will be the amount of capex on that first phase?
It's about additional 100 crores, I think.
And what kind of revenue we can achieve in FY27, I think. It will be the get completed by this year. So revenue will start in FY27. Is that understanding correct?
Right. So basically, the Odisha plant would start operation in phases. So the first phase is expected to start somewhere in Q4 of FY26. And revenue expectation for the last quarter would be around 10 to 12 crores, since it would be only for 1 quarter.
And 10 to 12 crores, but I think just after when the plant gets started, you can't ramp up 100% of the capacity, right? Hello?
Just a second. Yeah. So basically, what will happen is the first phase will start in the last quarter of FY26, and the next part of it, so some part of it would get operational in July 26, and the full facility would start operating or functional from 2.5 years from now. So basically, it is a phase-wise commercial production that would start for this particular facility.
And what is the target revenue for FY26?
Target revenue for FY26, is it only from Odisha plant that we are talking?
No, I am talking overall company level.
So from the existing plant, we expect 100 and 110 odd crores. And for Odisha, 1 quarter that we will be operational, we expect it to be around 10 to 12 crores.
Got it. And secondly, on the product side, like we are going to manufacture silicon carbide, right? So, who are the potential customers? Can you name the few, like who will be our customers, and with whom, whether what kind of understanding are we having right now, whether they have visited our plant or visited our plans, and are they very much committed as far as buying of our products is concerned?
So we have letter of intent from many different sectors, leaders globally, not only India but also Europe and US. Our silicon carbide diode product would be out sooner, and we already have some orders as well. But the idea is that we make in India for global applications, global markets, all kinds of low, medium, and high power semiconductor modules and systems if they need it.
Got it. And so, what is the rationale behind selling?
Mr. Goel, I'm sorry to interrupt you, sir. I would request you to rejoin the queue for follow-up questions, please. There are others who are waiting in it. Thank you so much, sir. We'll take the next question from the line of Sandeep Rao from Canara Bank Securities. Please go ahead.
Am I audible?
Yes, sir. Please proceed.
Okay. Thank you, Dr. Harshal Mehta. Sir, my first question is, earlier you had told about appointment of CEO, and the progress has not as happened. So what is the status about the appointment of CEO, new CEO?
We are in the process of shortlisting the potential CEO, and before that we already hired chief marketing officer, global marketing officer, because of the fact two things are important: one, having product, and second, being able to sell it. So we already have Perry Shugart appointed as the chief marketing and business development officer. I have in the meantime been chairman and managing the whole project, at the same time shortlisting the right CEO candidate. I am frugal, and I'm looking for frugal person.
Okay. So number two is, why did Ramesh Kumar resign from the board? Any specific reason?
So I think he is with his new job, he is more busy and traveling and so forth. So he's not able to provide full directions and guidance to the company. That's the reason he resigned.
So number three, the bottlenecks in Halol. The last interaction with investors, you are told that bottlenecks in Halol will be tried to be removed. Any progress in that front?
We have been making. I don't understand the question, but I understand you are talking about the bottlenecks in Halol. And if that's the case, we already have installed a few newer furnaces, so that our throughput is increasing, and we don't see any bottleneck from the manufacturing perspective.
Next question is, sir, subsidy from Odisha government. When can we expect to come back to the company? Any indication, timeline you can give?
I expected a year ago, but I think we should expect something before end of June.
This 2025?
Yes.
Okay. For my final question, why the company has gone for bonus and split of shares when we are in the process of putting up capex? Why both the things have been taken up simultaneously? Any reason why the bonus and split announced by the company?
So, bonus and split, they are non-cash events, and they do not have any impact on the cash flow of the company. And these corporate events are generally to reward the shareholders who have been associated with the company for so long. So bonus and share split was basically to reward the shareholders. And just to reiterate, these are non-cash events, and they do not have any impact on the cash flows of the company. And secondly, basically the share split is to increase or maybe to overcome the illiquidity issue that the shareholders were facing, and we had received requests from various institutional investors that there is quite a lot of illiquidity in the volumes, and to address that particular issue, the share split was also announced.
Yeah, I agree with both the arguments, but my only request was the company could have done at least one of the things, either a split or a bonus, so that maybe next year or so you could have kept the ammunition ready for further incentivizing the shareholders. So that was the only concern from my side. Thank you, Dr. Harshan Mehta and team.
Welcome.
Thank you.
Thank you. The next question is from the line of Rushabh from RBSA Investment Manager LLP. Please go ahead.
Yeah, my question is related to the silicon carbide venture. Can you please tell me what is the maximum revenue potential from this facility 3 to 4 years down the line? And also,
Sir, I'm sorry, his line has been disconnected. I would request Yash to please proceed with his question and introduce himself and proceed with the question.
Hello, can you hear me?
Yes. Yash, please introduce yourself and proceed with your question.
Hi, I am Yash. I'm from Alpha Hunter from Jaipur itself. So basically my question is that we have so many companies in semiconductors and NVIDIAs of the world. So my question is that what is the one thing which is making us stand out of the crowd so that we can attain customers with a good speed? So what is the one thing? I mean to say, what is the USP of our company?
So I would say semiconductor is a very broad universe. We specify our core expertise are in power semiconductors, which if you look at, so our core sector is power semiconductors, and the biggest USP is that we are vertically integrated. Our roots started from GE and Harris Corporation, from the technologies that I purchased or acquired in 1998. And if you look at in terms of the sector that we are in, there has been no new startup in last 100 years. You still have ABB, Siemens, Mitsubishi, and Toshiba. And we are the smallest of the smallest, but still, in terms of the breadth of the product, we are second to none in terms of technology as well as our ability to reach. We have installed products in China against the global competition and so forth.
Okay. So that's
in India, there is no one who can in terms of the scope, can provide the products and the experience and the reliability and the name brand that RIR can.
Yash, does that answer your question?
Yes.
Do you have any further questions?
No, that's it from my side.
Thank you very much. Ladies and gentlemen, you may please press star and 1 to ask questions. We'll take the next question from the line of Rushabh from RBSA Investment Manager LLP. Please go ahead.
yeah, am I audible now?
Yes, sir, you're audible. Please proceed.
Yeah, my question is on the silicon carbide venture. I just want to know if you can share what is the potential maximum revenue that we can achieve from this facility, and also the corresponding EBITDA margins.
I expect, obviously, the potential, the growth of silicon carbide over next 10 years is about at least 35% compounded annual growth rate. So I expect significant. Presently, the market globally is about $4.5 billion. Indian market is small, but we are there to develop that Indian market. And if you look at the infrastructure investment that government of India is is planning in terms of renewables, in terms of high-speed railways, in terms of grid and transmission distribution. Silicon carbide will play a very big role in all of those applications. And at the same time, self-reliant Bharat policy, I think, would help us because we are the only one in that sector compared to other global sectors as well. I expect EBITDA margins to be about 25 to 28%. And I think in about next 5 years, I'm not so sure what the regulations are in terms of the forward-looking statement, but I would leave that to Ankit and Bhavin.
Okay. And sir, I just want to, recently there is some news flow that the Chinese have, they have increased the capacity so much in silicon carbide that the prices of them have reduced significantly. So is there anything, is that a concern for you for the export market?
No, I think if anyone who has heard me before, I always said that I'm not, my business model is premium, high reliability, medium and high power market. So if you look at where Chinese are, right now they are focusing 1200 volts, which is for silicon carbide, supposed to be on a lower power category side. As you go in the higher power, technology, expertise, and experience is tremendously valuable than we have because of our roots starting from GE days and so forth. So I'm not afraid about Chinese competition because we still have the core medium power and high power technology which offers premium, high reliability, high value products.
Okay, and just my last question. I believe there's one more company out of India trying to enter into silicon carbide, and they also, I think, acquired land in Odisha only. So, how is our product profile different from theirs?
Right. I guess you are talking about SiCSan.
Yes.
Yeah. You can ask them the question. I feel we would be far ahead and we would be much superior.
Okay. Thank you.
Thank you. We'll take the next question from the line of Navneet Singh, an individual investor. Please go ahead.
Thank you. Am I audible?
Yes, sir. Please proceed.
So, my first question is, what are the primary growth drivers for the company in the coming years, and how do the recent leadership changes, such as appointment of Perry Sugart as a global marketing and business development executive, align with these drivers?
So we do expect for the last 15, 20 years, we were focusing on the technology. We are focusing on to be second to none globally in technology. And I would be the first one to accept the weakness, and our weakness has been the resources, mostly, and also in marketing side. Now I think is a time where the global market applications of silicon carbide, as well as the energy sector, is growing. I have known Perry for a long time. He worked for me as well, and he brings in significant experience where we plan to target the market in terms of energy, railways, aerospace defense, and so forth. So I think it could change significantly in terms of our ability to go after growing applications and the key customers.
Understood. So how does our plan related to international footprint, and what do we see from the revenue perspective going forward? How do we see our market share, our revenue from international market?
I definitely see initially on silicon carbide side, we would see more export, probably about 60-65% export. And we'll have to develop Indian market for the applications that we see our expertise in terms of grid. We already talking to Odisha grid people and trying to identify a few opportunities where we can apply silicon carbide to improve the quality, reliability to Jindal steel, and also increase the efficiency of the plant. So being in a vertical integration, that gives us a significant advantage in terms of developing the application and be leader in it rather than following anyone.
And any colors on the operating profit margin from domestic market and from international market?
We always, if you look at our operating margins are better than our competitors because of the fact that my business model focuses on performance, reliability, as well as not in terms of we have significant barrier to entry in terms of our markets and our applications and our technology. So we expect to be at the leading edge in terms of the operating margins and gross and net margins.
Understood. My last query related to the any product that we are working now and it will be coming in future. Any new product?
We always, innovation has been RIR's main forte. We spend about 10% of our revenue into research and development. And we continue to explore new and new applications for aerospace defense. I see railway and defense for India would be the applications that we see. We already have samples into those sectors and going to the final testing.
Thank you. So that is all from my end and all the best for future.
Thank you.
Thank you, sir. Ladies and gentlemen, please press star and one to ask questions at this time. The next question is from the line of Meet Patel, an individual investor. Please go ahead.
Good afternoon, sir. So my question is, what is the maximum revenue we can generate after running on full capacity utilization on new plant?
I would be conservative, but at the same time, I think in 5 years or so, once the plant is in a full capacity mature, I think we should be able to get from Odisha silicon carbide plant about 1,200 crores or so.
Okay. And sir, what can be the net profit margin?
As we said, 25 to 28%, I think we expect it.
Sir, my last question is, sir, you are a very visionary person. So my question is, sir, do you have any plan for new capex in near term or in 2 to 3 years?
As far as I'm visionary, I'm also frugal and practical. So from both the perspective, I would keep on looking at opportunities, and as long as the opportunity is there, we will keep on generating revenue and plan to make that happen.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Suresh Chandra, an individual investor. Please go ahead. Mr. Chandra, I have unmuted your line. Please proceed with the question.
Yeah. Hello.
Yes,
Am I
sir.
audible?
Please proceed. Yes.
Yeah. Can you tell me what is the status of Odisha plant? When can we expect the revenues to start coming from the Odisha plant?
The capex for Odisha plant is 618 crores. We expect is an ecosystem. We expect there are 3 parts where we can start generating revenue from FE, which will start in fourth quarter of FY2026. That second will come from packaging. That would come about maybe end of 2026, second quarter. And then the final would be the device fabrication. That would be about 2 years from now.
Okay. Okay. So out of this 600 crore capex, how much is the government incentive from Odisha or the central government, and how much is the RIR's capex?
So the policy, as you know, for the government policy, is 50% from central government and 25% from state. We have some certain special incentives provided by Odisha because of the fact that we are unique in this technology globally. And We have commitment of 50% from state of Odisha.
Okay, so basically it's like around 200 crores will be from RIRs and around 400 crores will be coming from the government, both state and central together.
Yeah, it depends on between 50 and 75%. So far we have commitment from Odisha, and if we get the central government commitment, then it will become 75%.
Okay. Yeah, thank you.
Thank you. We'll take the next question from the line of Manan Vandur from Wallfort PMS. Please go ahead.
Yes, thank you for the opportunity. So even as you said that we currently have 50% commitment from the state, and if we get central also 75, so then the rest which we still require of around 200, out of which 60 crores we have done, correct? So the remaining 140 crores something, so how are we planning to get that in?
So we have about the last quarter of the previous investment is remaining still. So we will do 80 from that one. And the remaining part we would distribute between equity and debt. We've been talking to a few banks because the subsidy part also includes subsidy on the interest. So that's the plan.
So, sir, what would be the equity and debt part? How much would that be? Could you please tell us?
We are in the process of thinking it, which is beneficial overall. And right now we don't know the answer, but it could be 60-40, it could be 70-30, don't know yet.
Okay, understood. And even if you give the percentage-wise breakup, that's nice. But could you give the amount-wise thing, like for example, not the breakup, but the total that you might take from equity and debt? How much that would be in crores?
I think we are targeting somewhere around 125 or so, and the balance from equity.
Okay. Total 125 you're saying. This includes debt and equity?
No, 125 from debt and another 120 or 125 from equity.
Oh, okay. Okay, got it. So thank you. And the next question is that about the plant that you said that the full operation will start in May 27, 2 years from now. So is my understanding correct that it could be May of 2027?
Yes, in that time frame.
Okay. And let's say we operationalize in May 27. So how many months or how many years could it take for full ramp up?
About 2.5 years for full ramp up. So we start in 2 years from now, and after 2 years we will see the full ramp up at a full potential of the plant.
So that means by that understanding, you are saying that FY30 could be 90% capacity utilization?
Yes. Correct.
Okay, understood. And that's when the guidance of around 1,200 crores comes into picture. Is that correct?
Yes.
Okay, understood. And sir, this subsidy, how is it going to come? Like every month or year, or how is it going to be?
So the subsidy, the policy is pari passu, meaning it could come in 2 or 3 tranches, where we would put in our part of 50% into non-lien bank account, and the government of Odisha will put in their part of 50% in non-lien bank account. And at the end of that tranche, it would be, the expenses would be fully audited by the right people, and then then the next tranche would happen. So it won't be monthly or yearly, it would be based on the phases or milestones, and it would be pari passu.
Okay. And so one last question would be that how much would be our asset turn for this 620 crores total capex asset turn?
Sorry, your question. I'm sorry, can you just repeat your question?
Yes. So we are doing a total capex, Odisha capex we are doing of 618 crores, right? So what will be the asset turnover ratio? Like, matlab, out of this 620 crores, we are saying that we will do 1200 in FY30. So does that mean our asset turnover ratio will be 2?
Yes.
Okay, understood. All right, that's it. Thank you so much. That's it from my side.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Abhishek Sawant for closing comments. Thank you, and over to you, sir.
Thank you, Michelle. And thank you to everyone who joined us today and participated in the discussion. We appreciate your questions and continued interest in RIR Power Electronics. As always, we remain committed to transparent communication and delivering long-term value to our stakeholders. On behalf of the entire Board of Directors and Management, we thank you all for your participation in this call. Should you have any further queries, please feel free to reach out to us. We look forward to engaging with you again in our future updates. Have a good evening and stay safe.
Thank you, sir. Thank you, members of the management of RIR Power Electronics Limited. On behalf of Veritas Reputation, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.